This is Juan Trades from Wall Street Bible, coming at you with the April 6th watch list. So the first thing we're going to be looking at is the S&P 500, the SPY. Now, what are we going to be looking at? We're going to basically be watching the SPY to fill this gap to the downside, 394 to 395. This gap to the downside, which is around 397. And today we gapped up above 402. So 95% of gaps on the S&P 500 on the SPY are filled. 95%. On the 5-minute, 95% of gaps are filled. So what I am basically looking for is these gaps to fill. Now, how are we going to play this downside? We can either play this with SQQQ, the VIX, TLT, TQQQ puts. There are many ways to play that, even SPY puts. There are many ways to play the downside. So the first thing we're going to be looking for before we even hop into any plays is the break of the uptrend. Now, I am a major bull. I'm not going to sit here and say that the stock market's going to crash, right? I am all for being bullish. The infrastructure plan is coming out. Biden's coming out with the infrastructure plan. The stimulus came out. Trillions of dollars are being pumped into the stock market. But I am a technical trader. And as a technical trader, I recognize when there is opportunity on either side, either the upside or the downside. And as of now, I see us building 3 gap ups. So these 3 gap ups are a red flag to me. However, I do think that after we fill these gaps, we will go way above 406. We'll go way above that. We're talking 415, 425. That's my prediction. But 95% of gaps are filled. Now, what's going to be the first thing we look at before we get puts or SQQ calls or go against the market? The first thing we're going to be looking for is a break of the uptrend. Now, uptrends always have 3 touches. So let me go ahead and circle it for you guys. The first touch is down here. Second touch, third touch. An uptrend must have at least 2 or more touches. In this particular instance, there are 3. 2 or more touches create a trend. It could even be a downtrend. The same thing for the downtrend. 3 touches. Now, the first thing we're going to be looking for is for SPY to break the uptrend. I'm not saying we're going to open and come down, right? We could even open up here. But what we're going to be looking for is a break of the uptrend. Once we have a break, that's a signal that the market will have downside. So that means this will get filled, and it's not going to happen in one day, right? It's not going to just go all the way down in one day. I'm not saying that. What I am saying though is that these gaps can be filled over the course of days or even weeks. So if you're bullish, hedging is part of an experienced trader's arsenal. So be sure to hedge. That's the first thing I'm going to be looking at on the SPY. To the downside. Now let's look at SPY to the upside. To the upside, I'm going to be looking for SPY to break above this previous high at 406.94, and you could even scalp it to the downside here. Now I want you guys to think about it like a bouncy ball. So we come in here and volume, these candles down here, let me zoom out a little bit. These candles down here, this is the momentum that the ball is thrown with. So if we imagine this as a bouncy ball, right? This is our momentum. We go in and we're going to bounce around support and resistance. There will be no breakout until there's a break with volume. If there's a break with volume to the upside, we will continue to the upside. If there's a break with volume to the downside, it will break here and test previous support levels. These are our targets. Strong support levels. And these are graphed out also by pivot points, but that's a different story. but to the upside above 406.94, to the downside below 405.75, or a break of the uptrend. 3 gaps to fill to the downside, 3 touches uptrending. Once this uptrend is broken, below the 365 moving average, below the 365 moving average is bear territory. Above it is bullish. So 3 gaps to fill, 95% of gaps are filled. I'm not saying the market is going to crash, but what I am saying is that we can have slight pullbacks. So plan accordingly. The next stock we're going to be looking at is SAP. They had great news. Google will stop using Oracle's finance software and adopt SAP instead. This is so bullish, especially because of a huge company like Google, huge market leader like Google, adopting their financial systems. This is crazy. So SAP, going to be looking at SAP above, what is this level here? 132.78 and above 134.96. So what we need to happen here, right, is say we gap up, say we gap here. We're gonna need SAP to hold this level. If we open down here, we're gonna need SAP to break with proper volume and hold. Now, how does a break with proper volume? What does that even mean, right? So volume is force, momentum. We're gonna need a green candle to break with momentum and hold for 15 minutes. This resistance level will turn into support, and the support will be rejected. That's how we know that SAP will continue higher. First target will be 134.96 on a break above 132.78 with proper volume in accordance with SPY. So a break above 134 is extremely bullish, because now we're talking about 32 week, I want to say 32 week highs. No. So we're going to be watching SAP above 134.96 and above 132.78. Next stock that I'm going to be watching tomorrow is Tesla. Tesla beat delivery numbers. On top of that, they are trying to break the downtrend super hard. Now, I am graphing this downtrend from months ago. This huge downtrend that Tesla created. Now, for the sake of this video, I'm going to delete all this junk and I'm going to regraph it so you guys get a better understanding of what I'm talking about. So let's remove it. We're going to go to the 4-hour time frame, because this will make it a lot easier to get all the candles. So now that we're in the 4-hour time frame, remember the 3 touches. So 1, 2, here's 2 touches. Remember that a trend line has to be 2 or more touches. So here we have 1, 2 touches, 3 touches. 4th touch would be a breakout. And I was also graphing from here downward. Another 2 touches. Here's 1 touch, here's a 2nd touch. So now that we have that, we're gonna go back to the 5-minute. So now that we're in the 5-minute, we can see more clearly of where Tesla needs to break out. Now this is a bit sloppy, right? Because I'm doing it quick now. This is a little bit poking out, but you get the main point is that Tesla's downtrending and that we need a break of the downtrend. Preferably, we need a bullish divergence. We need the relative strength index to create higher highs and higher lows, while at the same time Tesla breaking the downtrend. If we can get this, it's called a bullish divergence. That is a direct indication that the momentum is shifting within the stock, and this will drive Tesla even above A50, So second stock on my watch list is Tesla. Watching Tesla above, what is this level here? I want to say, let me go ahead and graph it out. I want to say I'm watching Tesla above this level here, which is what? First level would be 877. That's one level I'm watching above. Second level is above the high that we created today, which is going to be 708. If we can break that high, looks good. To the downside, Tesla, remember the bouncy ball? To the downside, below 684, our first target will be P. This is on the pivot point standard. Let me pull it up because you guys might be confused on the pivot point. So pivot points are graphed out based on supports of averages from the past. So it basically graphs out support and resistance levels for you. Resistance is a level of highs, support is a level of lows, and it's where the price had trouble breaking or reversed, either to the downside or to the upside. So now that we have this graphed out, we're going to use the same bouncy ball technique, whatever. So it's going to bounce from the top. From here, if there's volume, it'll break out, and if there's volume to the upside, it'll break out to the downside, to the upside. But we do need to break out above 708.14 and below 684.96. So this is where I'm watching Tesla. I'm watching for a breakout here. On top of that, look, if we graph what Tesla is creating now, which is a small uptrend, 2 touches. Remember, 2 touches minimum for any type of trend. Let me delete this one. So here, if Tesla breaks this uptrend below 684, looks good for puts. Above 708 looks good for calls. And of course, a break of the downtrend. Relative strength index, bullish divergence. Relative strength index showing higher highs and higher lows, representing a shift in momentum. This will drive the stock higher. So we're talking about 2023, 2022 leaps. Leaps are contracts that are 9 months or more. So we're talking about, we'll get some leaps, 2022, 2023. I wouldn't go with 2021, but 2022, 2023 on the break of the downtrend will be great. Next stock we're going to be looking at is Texas Instrumental. So TXN, I have this on one of my accounts, and this stock has just been climbing. It's just been completely climbing. This is a great stock. It's also known as a dividend stock. Dividend stocks pay you either quarterly or monthly or yearly, depending on the type of dividend payout that the company has. This is known as a dividend stock. People live off of this stock in dividends. Companies pay out either from 1% to 20% in dividends, depending on the risk you're taking when buying the company. But point being that this is a dividend stock and it's on a rip, keeps coming up, so it's great. Let me go ahead and graph all the low points. So we need at least 2 touches. We have our first touch, we have our second touch, even third touch here. We do this, 3 touches, and it doesn't have to be right at the bottom. The point has to be that they have to touch. It could go in between the candle, but it has to touch. Wherever the price area is where it touches, that's where you're gonna put your trend line. So here, it might not be all the way down here. It's okay. But wherever they touch is where it needs to be. So here, we're looking either for puts on a break of the uptrend with proper volume. So boom, either break of the uptrend. If it breaks the larger uptrend, right, which I think is very, very unlikely for Texas Instrumental to do this, especially after the rip, it could potentially see 174, which I doubt it would do that. But if it bounces at this level here, if it bounces at this area, we can potentially get some calls here on a bullish divergence. Now we're gonna have to change this to 14-day so we can see the bigger picture. So here, what we basically need to happen, right, is the relative strength index, the RSI, will continue to downtrend. After the RSI shows us a bullish divergence, which means lower highs and higher highs. After it shows us a bullish divergence, TXN can bounce and continue to the upside, potentially to 200. There's another play that I'm looking at. A stop loss will be a break of the uptrend. On a break of the uptrend, this is coming down, you know, because it has to be at a level where everything is priced in and it is a fair price. If it's overvalued, it's gonna come down. So we're gonna have to see if it bounces at this area here on a relative strength index bullish divergence. It's gonna continue to the upside. If it breaks here, we could potentially see more downside. But hey, if it comes down, I'm just gonna buy some more because this is a great long-term dividend stock. We're talking about 2 to 7 years. You hold this 2 to 7 years, it pays you a dividend of 2%. Great pick for a dividend stock. The next stock we're gonna be looking at is Airbnb. So ABNB. This is one of my favorite stocks. Airbnb. I believe they have a lot of potential in the future, because people buy real estate just for this stock, you know, or just for this company. People buy real estate just for this company, just to be able to rent out their houses on Airbnb. So this is a great stock. So what am I looking for on Airbnb? I'm looking for a bounce at 185.61. It's gonna be the same type of move that we were looking at with TXN, Texas Instrumental. So here what we're gonna be looking for is a bounce on Airbnb to the upside, while simultaneously we need this to start creating higher highs and higher lows. If we have this bullish divergence, we have Airbnb bounce here, we can potentially enter here, a breakout with proper volume, resistance turn support rejected. It could potentially even see 192, but we're gonna figure this out coming into tomorrow. We could also graph this out as a descending triangle. You guys can see here, it's descending. So breakout, a bounce here, right into the upside, breakout of the descending triangle with proper volume. Some people are more conservative and won't enter above until it breaks a previous high, even after a break of a triangle. Descending triangles are high probability to the downside, so this is risky. But while the relative strength index creates higher highs and higher lows, we're talking about possibly 210 on Airbnb. Basically gonna conclude my watch list. Let me know if you guys like videos like this where I teach and I give you guys my watch list. A lot of these plays I take on my own just because there's a lot of risk involved. But let me know if you guys like these type of videos, and I'll continue to do them daily so you guys can have a daily view into what I am looking at. So thank you for watching. God bless. Take care.